Has the stock market bubble popped? Has the EV and the growth stock bubble burst? Well, yes and no. A stock market bubble is where you have euphoric buying. Everybody thinks they're getting the future. They're buying these innovative, disruptive stocks, and they don't care about the valuation. They don't give two craps about the price. And what happens when that goes on? These prices go to the moon. They get out of control. The valuations go above the actual real value of the company, and that's a bubble. And eventually, the stock market corrects. The stock market never lies. The bubble pops, and you have all these stocks come crashing down. A good example of this was the dot-com bubble in the early 2000s, where every single company that had a website, the stock price soared and went higher. Well, eventually, people realized just because a company has a website doesn't really mean much. And sure, the internet's the future, but just because a company has a website doesn't mean that company's the future. And the dot-com bubble popped and you had stocks come crashing down. Well, we got a similar situation happening in the EV sector right now. Every investor wanted to get some exposure to EV, and I don't blame them because EV is the future. Well, this brought on a bunch of trash companies coming out with news releases saying they were getting involved with EV. This sent their prices higher, even though it was unwarranted. But what's happening now is the stock market is flushing out these trash EV companies, and it's bringing down the entire sector. Doesn't matter if it's a great long-term company like Tesla or a trash penny stock that just got involved with EV for the hype. We're going to be breaking this all down in today's video. We're going to be talking about some of the top stocks that I'm going to be looking to invest in at these discounted price points that we're seeing in today's market. And we're going to be looking at the history of the dot-com bubble and how we can implement what happened there in today's market and how we can use it to make tons of money from it. What stocks should we be looking at these discounted price points for long-term growth? All right, let's break it down. Let's get it. Let's get a little context, an example by looking at this dot-com bubble chart. So the dot-com bubble, any company that had a website attached to the business, the stock went to the moon as investors realized that the internet was the future. The Internet of Things was the future. That was no secret. So investors trampled over each other to get exposure to the internet, and that drove the prices sky high to the moon. However, the problem of that was that a lot of these companies were just throwing websites to their business to get some hype, and that eventually led a lot of trash companies to trade above their real valuation. And when that happens, the bubble is eventually going to pop, and that did happen, and we saw the NASDAQ crash. And what that resulted in was a lot of really good companies started crashing with the entire market, with the entire NASDAQ, and a lot of investors being able to invest in these good companies like Amazon at extreme discounts. And I think that's what we're seeing in the EV sector right now. The EV sector has seen massive volume come into it over the last couple of years as investors realize that EV is the future of the automotive industry. It's no secret we're going to be transitioning to EV. That doesn't mean that every single EV stock out there was a good investment at these crazy valuations. Look at this Amazon chart. How ridiculous is this? Okay, so the dot-com bubble was back here. If we zoom into it, we see the run-up preceding the dot-com bubble. From the late 1990s, 1997, we're trading at less than $1.50 per share. By the time we hit 1999, we're trading at $110 per share. And people bought up here, bad investment, right? Wrong. Okay, so the internet was the future. Amazon was innovative. They were doing something new. It was disruptive. And you had to hold through this entire drop. But let's say you added at 60. Let's say you added at 50. You added at 40, 20, and it dropped all the way down to $10. You built a position, let's say giving you an average price of $40 or $50 per share. We'll say you have an average price in Amazon of $45 per share. Back down here at $10, sure, it sucked. You were holding a $40 position at $10 per share. That is absolutely no fun. But if you had the patience, you had the insight to just hold that position because you knew Amazon was innovative, they were disruptive, they were going to take advantage of the Internet of Things, and they were going to expand on their business model of just selling books, that it was going to become a huge company. And if we back off the chart a little bit, that's exactly what happened, and Amazon went to the moon. So your $40 average price way back here turned into this, and Amazon recently hit highs of $3,500 per share. And I think we're seeing a similar trend happen in the EV sector. Sure, it sucks to hold these EV stocks as they crash, but they're going to be around forever. EV is the future, and what's happening now is the stock market is flushing out these trash EV companies that just got into it for the hype. It was a cash grab for a lot of these EV companies. They would come out with news releases saying they were getting into EV when really they have no intention of ever coming to market with a vehicle. So it drove the prices up as investors said, oh, this company's getting into EV, I'm going to buy it. Well, that's what's happening now. These trash companies are getting flushed out, and it's bringing the entire EV sector down with it, including Tesla. If you don't think Tesla is going to eventually see new all-time highs off this recent pullback, then you've lost your mind. It may be 6 months from now, it may be 6 years from now, but Tesla will 100% see new all-time highs. So Tesla being the leader of the sector, it's pulling back right now, but as soon as it bounces back up and breaks out, maybe we see new all-time highs, that's going to lift the other stocks in the EV sector up with it. A rising tide lifts all boats. The global EV market is just going to grow steadily over time. Over the next few decades, we're going to see the EV penetration rate increase drastically. Right now, the US EV penetration rate is around 3%. That is nothing. We have 97% upside as customers transition away from internal combustion vehicles and they buy EV vehicles. As the range increases, people become more comfortable buying EV cars. We're going to see these stocks, their revenue numbers climb. That's going to give investors more confidence to buy into these stocks and drive the prices higher. It may not happen overnight, but it will happen. And these companies are becoming takeover targets, acquisition targets. As their prices drop, as the stock prices drop, big companies, car manufacturers like GM and Ford, it is my belief that they're going to start buying some of these smaller EV companies. Why put your own resources into it when you can just scoop up these companies for the cheap? Look at these companies, their prices are dropping, and Ford and GM, they're behind the ball on this EV wave, and they're going to start buying these smaller EV auto manufacturers. My biggest holding in my portfolio is Hyliion, and I am down on my position. Down pretty good on my position, but it's my highest conviction long-term stock, and the more it drops, the more I'm going to add to my position. I started adding at like a $20 average price. I added when it got down to like 16, and then I've been adding on this latest move lower, and I will continue to add as low as we go, as I believe the Class 8 semi-truck space is not ready for total EV yet, and it will use Hyliion's hybrid technology to get them there. And I think Hyliion is going to be a takeover target as well. These companies like Hyliion, Workhorse, Lordstown Motors, all these small EV companies that are around $1 billion or $2 billion in valuation, I think are going to become acquisition targets. So where does that leave us? What am I going to do? What is my plan? So I do think we could see some more downside over the next few months in these EV stocks and these growth stocks. However, I will be adding to my positions consistently. Every single month, I will be adding more into these stocks if they continue to drop. Okay, for example, let's take a look at Tesla. Tesla right now trading at $631 per share. If it drops to $550, I'll take an ad. If it drops to 450, I'll take an ad. If it drops to 350, I'll take an ad. That would give me an average price of what? Let's call it $525 per share. Tesla rounds back out, breaks new all-time highs, and goes to the moon. You bought the crash, you bought the dip, and you're sitting pretty when it rebounds. And it's my full belief that these stocks will rebound. So yes and no. I think the bubble has burst in the EV space, but I still am a huge believer in EV stocks. EV is the future. If you get in these EV stocks now, in my opinion, you'll be happy 10, 15 years down the road. I think this is probably the greatest opportunity of our generation. And I'm not just saying that. Everybody says, oh, I'm waiting to invest in the stock market until the next correction. I want to buy the next crash. I'm waiting because if I had just bought in the last crash, I would have got rich. But then the crash comes and you miss out. Well, it's staring us right in the face in these growth stocks, in these EV stocks. It's happening. Right now it's happening. And are we going to take advantage of it? I for sure as hell am going to take advantage of it. I'll continue to add to these really good long-term forever type stocks. I love all of you guys. I'll catch you guys in the next one. Until next time, peace.